when we did not need oil to get around. That was long ago. And now, as OPEC meets for its Vienna summit, the issue is how to balance global demand against a supply glut and still make a profit.
The last 9 months have been particularly challenging for the oil industry. The crude oil prices lost half their value.
But discussion on whether OPEC will lower its production ceiling leads to a consensus view? No, they won't. Prices collapsed after Saudi Arabia and its Gulf allies began promoting market share rather than price last November. But they have perked up since. Many see stronger demand ahead. India's diesel use has been rising rapidly. Chinese consumers have been buying 2 million new cars a month. Even in debt-shaken Europe, fuel consumption is near 30-year highs. While turmoil in the Middle East is seen having little downward impact on prices. As for the 30 million barrels per day ceiling, experts say that is already being exceeded in any case.
And I think the economic uncertainty, the financial market volatility, and the fact oil prices have actually been creeping higher a little bit now suggests that I think they'll probably stand pat for now and of course reassess in a few months' time.
Others think the demand argument is overdone. China especially a concern.
In 6 months from now, we might maybe talk about China, the recovery in China, but we have not seen any good news from the China recovery lately. And we are even talking about less than 7% growth. And that is going to be waiting on oil prices as commodity prices.
Talks also emerging from Vienna of an oil price at $80 a barrel. Some delegates touting that as a new fair price. Though with Brent crude currently at around $63, many analysts see that as not only over-optimistic but also as a long way off. With agency inputs, Business Desk, DD.